Copper prices have been soaring, hitting all-time highs. Backed off a little bit. Same thing with gold. Again, seeing prices hitting higher and higher. What's going to happen next with copper, and how does this affect miners, specifically FCX stock, which is Freeport. Freeport themselves, one of the bigger out there. If you overlay the charts, copper versus the stock price for Freeport stock, you see that it is heavily entwined with the overall value. Now, here's the thing. Eventually, supply will catch up with demand. That copper prices will come back down. We're not going to keep these prices up here for forever. What will happen to FCX stock when that happens? On the one hand, a couple years ago, you could have picked up FCX stock Freeport for $10. It's trading at above 50, could go to 60. We're probably at the highs, given the fact that the Federal Reserve is going to go ahead and contract the economy. Demand will dwindle. China's demand is interesting. Eventually, they will have enough copper and they will demand less. And that's when, more than likely, the short sellers will step back in after getting squeezed out and win their battle. Let's jump in. I want to break down a few charts on Freeport stock, FCX. Let's jump in. Here's a look at FCX stock, Freeport McMoRan. And I went all the way back to 2020 to kind of show you this. Again, you could have bought it actually $4, $5, all the way back in March 2020 when everything went down. Now, of course, that was when everything shut down with COVID shutdowns worldwide. FCX stock dropping all the way down to almost $4. Now it's trading at 51. It's a little bit above 50. Can we see 60 on FCX? That'll be interesting. But let's take a look at, here is copper and gold. You can see the metals pretty much surging more and more. FCX stock, Freeport stock, of course, following along. Basically, the price of these metals determines the stock price. Supply and demand, you just break it down. Now, China all of a sudden has stepped up. They've got all these new programs to get their economy ramped back upward. They have to. Domestic demand is dwindling. The problem with that is the U.S. economy is starting to slow down, so anything we're demanding out of China is going to slow as well. So while China's economy does need a nice little boost, it's going to get sort of a few bumps in the road as the U.S. economy, the growth rate continues to moderate because interest rates have been moving higher for longer. Look at all the prices of the metals, copper and gold, of course, being two of them. Cryptos are hitting all-time highs. The stock markets themselves hitting all-time highs. I'm not necessarily saying that we have bubbles going on here, but we have asset valuations that are at all-time highs. And what is the response to that? The Federal Reserve has raised interest rates to as high as they could at this point to contain price pressures. The problem is the Federal Reserve is going to sit on their hands for a minute and keep interest rates where they are. Growth will suffer. Unemployment will increase. Demand will suffer for products. Consumption is going to decline. The rate of growth of consumption will decline. I don't know that we're necessarily going to hit a recession, but we're certainly probably going to see declining growth rates. And that means price pressures and prices for precious metals and copper will likely go down. The short sellers will step in and punish the price of copper. True, China will probably need to step in and buy more and more copper as time goes by, but eventually their supplies are going to stack up to a point where they don't need much more. Then what happens to the price of copper? And we take a look at this chart, these charts here, showing FCX Freeport stock versus copper. If the price of copper drops significantly, FCX stock follows suit. So it's really at a risky point at this level. Given that, here's a kind of a closer look at some of the things going on. This is XLB stock, which is the materials sector ETF. There are 11 sectors in the stock market, the S&P 500, and SPY stock being all 500. XLB stock, of course, is the materials sector. Broadly speaking, they kind of go hand in hand. We're seeing some movements downward in XLB stock. I don't think this is the beginning of something kind of big to the downside. My take has been the same, and I've been consistent that we would see rallies going all the way through. Summertime is when I said rallies would stop. Then September, October, November, December, going into the new year, 2025, is when I expected that we would see selling, significant selling in the stock market starting as early as September and October. Given that, XLB stock and Freeport stock, we're going to probably see that moving much lower. Here's what's really going on. U.S. 10-year treasuries moving back upward. The savvy investors, the savvy traders on the bond floors, they're not into meme stocks or anything like this. They work for banks. They're selling their products to consumers around the world, U.S. Treasury debt. 20 and 30 year, 10, 20 and 30s are pushing back upward again. Eventually the Federal Reserve will need to lower interest rates, but that's after the damage is done. Right now we're seeing a move back higher in interest rates, and that will effectively move everything. Let's break down Freeport, the company. Looking at things, assets $54.2 billion, cash on hand, and short-term investments $6.2, and liabilities at $26 for a total equity of $28.1. There are $1.436 billion with $51 at the share price, giving Freeport stock market valuation of $74 billion. Enterprise value for Freeport stock is $93.872, considering market valuation, cash on hand, less cash on hand, adding in liabilities. All right, price to earnings, price to sale, price to cash flow, price to book. Let's break these down real quick. Price to earnings, of course, 41.33. That's a bit rich. Price to sales, 2.85. They've been fairly consistent over the past few quarters, but this again, I mean, we're talking about a base metal, copper, a bit on the rich side. Price to free cash flow, 11.09. Price to book 3.98. Now remember, this is a company that this type of company, of course, is very capital intensive. If interest rates continue to trend higher and higher, the cost of capital will start affecting things. Demand declines, price declines, profits decline for Freeport. Looking at the latest financials, Q1 2024 6.21. Projected revenue is what I wanted to look at, nearly $25 billion for 2024. 2025, $26.18 billion. All else equals. This assumes copper prices remain high. I do not believe that copper prices are going to consistently remain high for a very long time. I believe the Federal Reserve will succeed in bringing price pressures down to its target rate of 2%. I believe they go below that, but not necessarily zero. Gross margins 28.1, operating margins 24.7. These are pretty high for a mining company. Net margins for Freeport 7.5%. The broader stock market is about 11%, 10.5%, somewhere in there, depending on the quarter and the information we have from companies reporting at any one particular time. So they are a bit below average when it comes to the net margin. Projected earnings per share 18.4 for 2024. We've already printed Q1, so that 18.4 I'm going to adjust to Q1 for 2025. The market expects 19.13. This gives you a yield of 2.971% for Freeport, a mining company. That's a very small yield when you consider the potential downside risk if the economy in the U.S. contracts more. Yes, copper prices are moving higher, but they've peaked and look like they want to come back downward. The short sellers are probably going to get vicious and start pushing things lower. Given that, U.S. 10-year Treasury trading at 4.5%, that's a better investment overall. Sure, not exactly the most sexy investment, but profits to me are very sexy. And I expect that the Federal Reserve eventually will have to lower interest rates. And because of that, anybody buying rich right now with 4.5% yield, those will be worth money. Those bonds will be worth money once the Federal Reserve lowers interest rates 3, 6, 9 months from now. that 4.5% is going to be worth a lot more than, say, a U.S. 10-year Treasury trading at 3.75%, 3.5%. That's how I'm kind of breaking things down. I think the Federal Reserve is going to succeed. The price growth will decline. Unfortunately, there will be casualties, and that will be economic growth here in the United States. While China does ramp up its copper purchases, there are limitations. And I believe the price of copper moves lower because of that. FCX stock has a lot of downside risk. And when you look at the yield you're going to get by buying at these prices, that's too much risk for too little potential profit. I prefer the 10-year Treasury. Make sure to hit that like and follow button to follow along. I'm breaking down all these kind of economic indicators, and especially looking at some of the things that are flying high right now because they're way overpriced. Hit that like and follow button. See you in the next video.